Hey guys, welcome back to the channel. Hope you're doing well. Now, today's video is the second part of the 5-part series I'm going to be releasing over the coming weeks, where I do a full week's worth of backtesting on Euro-US dollar using my SMC strategy. For those of you who haven't watched Monday's run through already, I strongly recommend you to watch that first, as it's going to give you a really good insight into the details of my strategy, and it's also going to set you up for the type of price action that we're coming into on Tuesday morning. Now, for those of you that have already watched Monday's run through, you will know that we haven't taken any trades so far this week, but Tuesday is where things really seem to pick up, and we do manage to catch 2 trades during this session. First one is a loss, but the second one is a really nice win, where we managed to catch a trade with a final TP of over 18R. Just a quick note before we jump straight into the video to of course leave a like and subscribe, and if you haven't already, be sure to check out both the Instagram and Discord server. The Discord server is a great place to meet other like-minded traders, and you're also going to have exclusive access to a whole range of free educational material that I share over there that I think a lot of you are going to take value from. And as I did mention in the previous video, there is now a mentorship program available, and this is where you're going to have a much more detailed insight into the 2 strategies I trade. You're going to receive my personal trade plans for both strategies, both the SMC strategy that we're trading in this video and also the price action strategy that I first became funded with. And you're also going to have access to a whole range of other resources, including my own personal trade data spreadsheet. Now, before I ramble on for too long, let's jump straight into the video and continue our backtest. So guys, I've just played price through to the morning of Tuesday around 6:45 when I'm normally getting to my trade desk. And yeah, we'll do the exact same process. We'll start on the higher timeframes, of course. Don't really feel the need to go up to the weekly this time, just because I only really do that at the start of every week. But we'll check the daily. Not much is going to change, obviously, within that one candlestick. But as you can see, again, we've got that really strong bearish order flow. After a break of structure, we're obviously anticipating a pullback at some point, but we've got no really close, strong demand zones to the left. So I'm more than happy to keep playing that bearish order flow until it fails. Same again on the 4-hour. We're in this bearish structure. We're having some sort of reaction within here, however, still yet to have any change of character. This is just a sort of small substructure pullback for the moment. So nothing that I can really be marking out on this 4-hour chart. As I said, to get a change of character, we're going to have to wait for price to come up here, or we're just going to have to wait for this bearish order flow to continue to give us a new sort of substructure range to play with. And yeah, otherwise we'll jump down to the M15. And as you can see on the M15, on Monday, we did have price come mitigate our extreme supply zone of our swing range. We've then had our internal structure flip bearish. So we're now in what I describe as phase A1, and this is when we're pro-swing, pro-internal, and we are within that swing range. So we're literally playing the end of the pullback. We're anticipating this point to become our new lower high. Just so we've got all of these lower highs in a row. We're anticipating this point to become the next lower high, and therefore we are anticipating this low down here to be broken, as it is a weak low. So coming into Tuesday, obviously shorts are highly favorable. I would not actually be looking for longs at all within this situation. Well, firstly, we don't have any demand zones down here to even be looking at longs from, but equally taking longs would actually be what I describe phase D2 of the market. And this is taking trades that are counter swing, counter internal, and within the swing range. So you're literally just trying to anticipate small sort of reaction points. And this is a really low probability phase of the market that I found. And it's rarely something, if ever, I'll want to be getting involved in. So we're looking for shorts, and we're looking to continue playing this sort of internal structure within our swing range. So easiest place to mark out, obviously, is our internal high, which would be this candle up here. Where you can already see this candle has been mitigated. We have a nice sort of push away. Price comes back in, mitigates that candle. Later on in the day, we saw that mitigation of the sort of flip zone we had here, and this is what led to that internal break of structure. If we look at that candle that mitigated the supply, we can see that this has already been sort of mitigated itself. And if we sort of just follow these mitigations, if I just change this to M15, we'll be able to see that we then sort of have, price push away, come back in, which mitigates that zone. And we then actually have a nice sort of inside bar candle within here. So I would be more than happy to mark out this zone. And we do actually have a nice bit of leg inducement below. But, technically this is a valid flip zone as well. Arguably not the most high probability, but you can see we do react from this demand. We have that reaction, which then pushes through. So I would be more than happy to mark this out, but I would be, very clear to understand that this could be used as inducement for the zone above. So we can mark out that sort of resting liquidity here. So definitely not the most high probability zone to be looking from. And we actually have already mitigated this zone before I would even be looking at setups. But what we could see here is a possible sweep of this POI before we tap into this zone. I definitely would be happy to look for risk entries within this zone because we are phase A1, which, as I said, is the most high probability phase that we can be in. And we do have that clear leg inducement. So I definitely would be happy to look for M1 risk entries within here. Otherwise, maybe a possible sweep entry after sweeping this flip zone. But we will jump down to the M1 and see what we can find. So now we are down on the M1. The first thing we can look to do is refine that M15 supply zone I was saying we were happy to look for those risk entries from. And same as I was saying on Monday's sort of run through, easiest way we can do this is to obviously take the extreme if it's left unmitigated. As we can see in this case, our extreme candle would be this sort of final buy before the sell within our M15 supply. And it has been left unmitigated. You can see price comes back fairly close, but we don't actually tap into that candle. Now, you obviously could take this candle and simply drag it across, obviously set your limit order on, but there's always a bit of discretion involved in trading. It's always sort of the nature of trading. No matter how hard you try to make it as mechanical as possible, there's always going to be a bit of discretion. And in this case, it's sort of how much you want to refine your sort of zone. Here, we've obviously refined it to that sort of extreme candle itself. But when we're trading in sort of high probability phases, so in this case, the phase A1, we've got a long distance to go before our target. And again, in this case, it would be that M15 swing low. I often don't want to over refine and sort of risk missing an entry just because I'm, being too greedy, trying to catch too much RR when we're really well positioned in our sort of swing leg. So in this case, we're obviously in the premium prices. There's no need to really over refine. And as I say, risk missing an entry just because you're trying to get a few more RR. So in this case, I would actually be happy to take the two sort of bullish candles. The reason I do that is because we do have this really nice engulfing bearish candle next to it. The low actually breaks the low of that sort of first bullish candle we have marked out. And yeah, I mean, the main reason is I just don't want to over refine. I'm more than happy to take a slightly larger zone. Obviously, my RR will be slightly smaller at the end, but if that means I'm tagged into this position, and I wouldn't be if I was over refining, I'm sort of more than happy to do that because I don't want to be overly greedy, as I'm saying. So we can literally drag our zone across. And as I say, I'm more than happy to set my order straight away, primarily because of that M15 leg inducement we were talking about. And I would obviously set my order on the edge of that zone and stop loss just above. And in this case, 6.5 pips actually looks really nice. So we'll keep it at that. And then we obviously need to mark out our sort of final TP. And as I did mention, it would be our M15 swing low. So you can see even with that slightly larger zone, we've still got final TP of 18.3 R. So, if this trade goes well, we've got a really, really nice target to look for. And, it just shows that even if you're not over refining, there's still plenty of RR to sort of catch in those trades. So we can set our order here, see if it sets fine. Yeah, that looks good. And we can jump to our M1 and we can sort of play price forward and see if we get tagged in. As I mentioned on the M15, I would still be looking for a confirmation entry if we do sweep that M15 leg inducement and get an M1 change of character. But we'll just see what price does as we sort of play through in the morning. Just so you know, as you can see, it is around 7 a.m. So just as I'm starting to trade for the day. And as I say that, we've literally just spiked our M15 leg inducement. So if we jump up to the M15, you're going to be able to see we've literally just spiked above and we've actually tapped into our M15 supply zone as well. So I would be interested to see if we can get confirmation entry here. For confirmation entry, I would need to see this sort of M1 candle go, which would be our M1 change of character, obviously. And we'll just play price forward and see if we can sort of get any entry. Okay. So we've got an M1 change of character. It's obviously only a wick break, but I'm more than happy to be a bit more aggressive with my changes of character. So I would be more than happy to look for an entry here. In this case, again, I would want to take this extreme candle. We do have a flip that, technically mitigates the candle, but we don't really push away that far from the extreme, and we've got, you know, a whole sort of large area that's been left unmitigated. So I would want to have that covered, and I would be setting my order here, quite a large stop loss, so 7 pips. But just to keep it simple, and as I said, you know, I don't want to over refine when we're in these high probability phases of the market, and our targets, if we jump to the M15, are going to be the exact same. So that M15 swing low, I will be taking partials along the way at the M15 internal low, but this would be my final target. And as you can still see, sorry, 14.5 R, so still really nice amount of RR in that trade. And we can place our order there. We can jump back to the M1 and see if we get tagged into this. I will just cover up this our risk entry. One thing I will note about the risk entry is I'm keeping this open for the moment. I'm more than happy to keep this open. Reason being as well is that if this trade doesn't work out, we've actually got some really nice M1 inducement formed above here. And the reason we have M1 inducement formed here is we have that M1 change of character. So there'll be a lot of people obviously taking sells from this area, myself included. And we never know, you know, we can always look at our setups, but we never know whether they're going to work out. We could be induced into doing something if price does want to come higher into this zone. Obviously, we've literally only just tapped in. So that is quite a strong possibility. I'm not sure why this hasn't changed to inducement, but it's supposed to be that liquidity line. You know what I mean? And yeah, I'll just get rid of this to make it a bit more clear for us, and we can play price forward and see if we get tagged in and, you know, what price can do. So we can see if you did want to wait for a candle closure, you did actually get a candle closure below for your change of character. And we'll just see what price does. Okay, so we've just been tagged into our position. So you can see, we'll move that over slightly, and we'll see if we can get sort of some type of reaction. You know, we can see if we had taken that flip zone, we most likely would have been stopped out. So it's a good job we did cover that sort of whole extreme candle. And we'll see, okay, well, there we go. Price is broken straight through. Not to worry, it was, you know, a good setup, one that I was definitely happy to take. And as I was saying, this high that had formed inducement because of that M1 change of character has now been swept very impulsively. As you can see, actually, we've got a really, really strong M1 candle, sort of 718. So, you know, not even a news candle or anything, suggesting possibly that, you know, those big financial banks and stuff are getting involved here. Who knows? We'll have to see what price does. What I'm going to do is just add this trade to a folder so we can keep track of all the trades that we do take throughout this week. And we can just cover that up. And I will show up our risk entry that we do have. As I was saying, I was more than happy to keep that open because of this M1 inducement we had form from that sort of change of character. Or if you're looking at it now, you would possibly describe it as a fake break. But either way, the most important thing is we've got that sort of M1 pullback inducement formed. We obviously had our M15 leg inducement anyway, but this is just sort of adding additional confluences for our risk entry above. So we'll continue to play price forward and see if we can get tagged in. And there we go, we do get tagged in. So nice entry there. We've actually had quite a decent reaction, but we'll see what price can do. It could obviously come back higher for retest. We're seeing a bit of reaction now, getting quite a nice push away. One thing I'm going to do very quickly is just drag up our tool here to show where 4R is. And the reason I'm marking out 4R is because I take a 20% partial at 4R to go risk-free. And I mean, as I said, it allows me to go risk-free without having to move my stop loss to break even, you know, which reduces the risk of price coming back to my entry just to retest before it drops. I've seen it happen a lot in the live markets. So I prefer to use this 20% partial at 4R. So yeah, we'll keep that there. And if price does hit that 4R, just make it a bit clearer, I will be taking my 20% partials, but we'll play price forward and see what price does. Let's speed this up a little bit. We'll go to sort of 5 candles and we can play price forward. Going to have to be quite close actually if we do get a partial. So we are pushing lower now. So we can see that risk entry was actually a really nice entry, literally tapped in with minimal drawdown. And we are pushing away now. Are we going to hit our 4R? Not yet. Seeing quite a strong rejection. Coming back lower now. Let's see if we break that 4R line. We can take our partials. Not yet. You can see we've come very close, but I'm very mechanical with my trade management. So I will be waiting for that 4R line to be broken. and we'll just play price forward quite slowly. There we go, literally bang on 4R, and we can close 20% of our position here to go risk-free. I'll play that one candle forward, so that's closed 20% for us. We can actually see this. Obviously, we had our previous loss, which is going to be showed here for minus 500, which is our 0.5%. And you can see we've got a realized profit of $400, which is the equivalent of taking that 20% off at 4R. So if we jump to our M15 now, and I'll sort of describe what I'm looking at. So obviously we've got our swing structure as bearish. Our internal structure was bullish to facilitate that swing pullback, but we have since flipped bearish, which has given us a very strong signal that the swing pullback is likely over. And we've now mitigated that sort of extreme supply. It was part of a nice chain. We had nice M15 leg inducement. We also had M1 pullback inducement form. So quite a lot of confluences stacked together for this trade. I would now be, just managing the trade. If we're going to look for possible setups, I would be waiting for an M15 change of character, which would be down here. There we go. Otherwise, I would be looking to take about 60% partials at the M15 swing low, and then I would be holding that final 20% to our TP down here for 18.32. But I will keep this here, and we will keep an eye on what price is doing. And we'll see what the rest of the day takes us. We're about 8 o'clock now, so only about an hour in to the day, and we'll just sort of play price forward and see what happens. As you can see, we're coming up very close to entry. We'll see if we retag. No, so now we've got that M15 change of character. We can possibly look for some more setups, because what does a change of character signal to us? Well, it signals that our internal pullback, which obviously started from down here, and we've come up into that supply zone, signals that this internal pullback is likely over. So now we've got even more confluence that we're ready to target our internal low and also possibly our swing low. So we can mark out our M15 flip supply zone here. So you can see very clear flip supply as price came down into our M15 demand. We saw that reaction failed, and we've now got our change of character. So a really nice sort of flip zone. And we'll play price forward and see if we come back to mitigate that supply zone. Otherwise, obviously, still just managing this trade, waiting for that M15 internal low to be broken. So price is starting to come back a little bit now. Haven't tapped into our zone yet. Very close to our zone. Are we going to tap in? Possibly. Doesn't look like it. We're now pushing away a bit. Obviously, a bit of a range through New York session. And as I said, not anything I would actually be looking to get involved in for the moment. Still just waiting for that M15 supply to be sort of mitigated. We'll see if price can tap in before the end of the session. Doesn't look like we're going to get any mitigation. And it's now about 4:15, so I probably wouldn't really be looking for any entries now. But what we can do is look to manage our trade. So if we drag this across, we can just play price forward and see if we get a break of that M15 internal low. The reason I've jumped down to the M1 to do this is I obviously want to be there when price breaks that low, so I can get an accurate sort of partial closure. We'll jump to the M15 and speed up a little bit. Though we'll probably break through as soon as I say that. Okay, now we're a lot closer. So we'll jump down to the M1 and see if we can be there when price crosses that M15 internal low. So let's just play price forward slowly, see if we're going to get a break of that low yet. And there we go. So we've just tapped that M15 low. So at this point, I would be taking my 60% partials. And we can close our trade there, obviously play the candle forward one more. And there we go. So now if we go down onto our trade down here, we can see our realized profit is now about $4.3 thousand. And we've still got an unrealized profit, which is our final 20% remaining, about 1.3 thousand. So what we can do now is, as it's actually the end of sort of Tuesday, I wouldn't obviously be taking any more trades past this point. We can simply just play price forward and see if our final 20% is closed out overnight, possibly. So we'll just play price forward. So we can see we do get that M15 IBOS, so we can mark that down here. And obviously this IBOS here, our internal break of structure, means that we've got our confirmed internal lower high, which would be this point here, which is actually, exactly where we've caught that entry from. So in that sense, it's a really perfect entry. Another thing to mention actually now is once I have taken that sort of first TP, so that 60% partial, I do move my stop loss to break even. This is something I'm still experimenting with a little bit. But I've found most of the time that once price, reaches our TP1, in most cases would be an internal low. If price does come back to entry, almost always does price break through the stop loss. So there's no real point in me now waiting for price to come back for any sort of retest on that entry. And yeah, at this point, I obviously just be relaxing in the evening and letting the trade do its thing. So I'd simply just let price play forward. We'll see what happens overnight, see if price does hit our final TP or whether we sort of come back at break even for that final 20%. As you can see, pushing down lower now, and perfect. So we get that final TP at about 3:15 in the morning. Obviously, final TP of 18.3R. We took that 60% partial at 13R, and we obviously took our initial 20% partials to go risk-free at 4R. So really good trade. And if we go now onto our closed positions, you're going to see that we've got sort of realized profit of 6.18. This is obviously with 0.5% risk. So if you're using 1% risk, like I know a lot of people do, it would be about a 12% trade. So a really, really nice trade there. As you can see, we actually caught a perfect entry for the end of that swing pullback. And yeah, a lot of confluences stacked together, which made this trade a really high probability trade. And yeah, very happy to have taken that risk entry primarily because of that M15 leg inducement we had just in front, which as you can see worked perfectly to induce buyers in, have their stop losses swept, and we were then able to catch that really large move to the downside. So now that trade has closed out, I will play price forward to Wednesday morning, and we'll then go through all of Wednesday's price action. So guys, that concludes the video. I hope you've been able to find some knowledge within there. We did take 2 trades today. The first was obviously a loss, but the second was a really, really nice win where we did manage to catch that large swing move to target the weak M15 low. Now, the next video in this series is of course going to be a run through of Wednesday's price action. And if you don't want to miss the release of that video, be sure to hit the subscribe button and you'll be notified as soon as that gets released. And as always, thank you to everyone who has watched this video, and I hope you have a great day, guys.